It's April 3rd. This is Rich Pawson at the Critical Point Podcast. Want to do a little update on the short-term to very short-term trends in the grains and oilseeds. And by the way, it's Friday and it's 11:09 a.m. Central Time. And we can see today, this is the daily wheat chart of the Chicago Wheat Futures, July contract, SRW wheat. And they put it up to the 5-day average. Seller interest then stepped in and overtook the buyer interest, or maybe the buyer interest backed away that they bought around first thing this morning. It's bringing the price back down. Now, it's still up for the day on this chart, but the daily stochastic has not paid any attention to this upside. It's still acting bearish. Now, it is oversold, so that's a warning that there could be a near-term rebound coming here. We looked at downside objectives, and this solid black or red box is the best downside objective. You can see the market met it yesterday, bounced today as if it was respecting that. But we have additional downside targets of less probability, showing that maybe it trades all the way down to 520 in the July contract, and that could still work. Even though it's oversold, it would just become more oversold. Now, time-wise, we're looking for an L3 bottom now into next Monday. We'll also allow Tuesday just to give a little extra time to see if it works out. Now, the problem is we could bottom now and the next 2 trading days for this L3, but it's going to run out of time for the next L3 top. So we may only see a 2-day blip higher, and then right on down for a brand new L3 trend that keeps wheat down for the remainder of the month. Let's go ahead and switch over to corn. So this is our corn market. This is the July futures contract. And we have L3 top along with L2, L1, and it went into just an L3. And we didn't label this correctly. In fact, this charting programs have a little difficult with labeling this morning. But we think this is an L3 top. So we're a little late here. It would actually be yet another monthly cash flow sale. Problem is the market's oversold, and I fully understand why some would ask, well, just how low do we want to keep making monthly sales? You can see the 5-day average has worked well. At least the funds have probably been selling near that. We can see today it's breaking down, and although we're showing this the last day for a bottom, we really need, because of the weekend, need to move that out. Not only that, it allows you to see what it's doing relative to a downside objective that allows for as low as 325 in the July futures. And much like the wheat, even if it were to bounce early next week, as if it put in an L3 bottom this week, it may only bounce for a couple of days and right down for another L3 downtrend. Currently, we'll take a look at this on Monday and perhaps re-update it, but it looks like the model is going to suggest there was an L3 bottom earlier this week, L3 top, and the trend is just down through next week. So a little bit different than wheat, but the same idea that soft prices can persist this month, and we showed that earlier this week on the weekly charts for the bigger trends. Market is oversold, but it's a wide enough spread on the stochastic here to suggest there's a chance for lingering downside momentum. So the bottom line is, until we can see trade over yesterday's high at 346 3/4, more so on a close, we think there's still more downside potential here than upside. Now let's take a look at the soybeans. L3, L2 top, seller interest into an L3 bottom, buyer interest into an L3 top. Rolled over, took its time. It kind of moved sideways, trying to decide if it was just a flag and prices would go higher or would they break lower. Well, the sellers won, and we see a breakdown. 5-day averages rolled over, confirming an L3 downtrend. The market is oversold, but wide enough spread to be concerned is still lingering momentum. Does not have to bottom to next Tuesday for this L3 trend, and it's already spent enough time going down that it's going to start limiting the amount of upside for next week. And because we think larger trends are down into late this month, it would make sense that rallies are not going to last as long as the declines. Now, it has met the best of downside objective set for this L3 trend. The market is within it at this moment. However, we can extend those to lower probability objectives as low as 842, and we should also take a look at this low for the year for this contract at 829 as potential support, but also a potential target for bears. The 5-day average is probably nearby resistance around 873 on the July contract at the moment. Bottom line is, yes, there should be an L3 bounce next week. Not convinced there'll be much of a bounce. Concern of lower later on, but at least a moment we can see that it is trying to meet some downside objectives here, is getting oversold. Maybe we will see a little bit of a blip next week. Just don't know how confident to be. Concerned that the market probably wants to take out the low of the year. Thank you. Manage your risk relative to analysis of others.